All right, good morning. Get some charts up here. All right. So it hit the fan last week. We spoke about it coming, and there it was. It was a matter of when, not if, and came with a vengeance. It was one gigantic, ugly down bar last week. So now what? Well, I think a continuation pattern is what should set up. Concept that we review with wide range bars is that their momentum moves in a smaller time frame that create a void. And you can see that on the hourly chart. There isn't a lot to stop it from going up. It doesn't mean it has to go up a lot. It's just a concept that keeps us aware of possibilities that, it could go up because of that momentum move. Now, looking at the 5-minute and the overnight, we see these pivot highs up there that would have to get up above. And we'll look at SPY. And let's go back here. Back. It was like the end of the day. It was trying to, little short covering. And then nobody was like, I'm not interested in holding this thing overnight over the weekend. And it made a little plunge to the downside there, a little climactic move. So now we got this little rounding bottom happening overnight here to see if it can start to make some type of a move, and of course up to where. We'll see how far it gets. As always, we look at the middle of a wide range bar. We're about there where I've got that little blue line as to maybe it gets up there, maybe not. I'm thinking not. Maybe stay in the lower third there. And there's this overlapping right there, which let's see where that is on the. Okay. So some consolidation that happened at the end of the day there on Friday. So sometimes, it's been a long time since we've had like 3, 4, 5 nasty down bars. We've had them on the upside because overall the markets have been bullish, but big bars to the downside, kind of there. That was a whipsaw. But, a bar like this communicates that sellers are aggressive and just lurking up above to knock it on its head. So one of the things we covered in the weekend video was this chart. And it just measures the day-to-day advancers minus decliners. And 2 takeaways from this. Well, we knew it was extreme. It was a big bar. Historically, when it gets this extreme in a short amount of time, you get stabilization. It also communicates 2 big red bars in a row with an advanced decline number of this, more downside is coming. So while getting to an extreme, we could get that stabilization. Over here, earlier in the year, we did get a momentum move, but these bars weren't as big as these 2. And lining up at the 18th, I guess was it right around here where it hit the extreme. And then as it went lower, we started getting this divergence where there were some stocks that were actually beginning to show relative strength, and then ultimately an even higher low. So this is something we'll be keeping an eye on as this continued correction unfolds here as to the day-to-day power of moves down and whether it begins to wane as it makes lower lows or stabilizes. So very short-term piece of market internals, something that I look at. I don't look at it every day, but we do want to see when things move in an extreme way. Does this agree, and is it at an extreme the same way we look at the intermediate term internals, like here, where it's got to the beginning of a bullish extreme, but it's just touching the lower band, right? Where what we really want to see after 2 big down bars like this is this thing tagging that lowest band and maybe 1.2, and this coming down here before we feel more confident in well, I don't know that it's going to be the low. If we do get some kind of mini crash from a continuation pattern and it just waterfalls to the downside, that could be the low for a while, where it just goes through a rebuilding process from there. But we'll see. We'll see. Get my little drawing tool out here. And we see this. That was more, this was looking like it was getting ready. And now we got this little blip to the upside just to make it a little more complicated. So we'll see if this continues down. I believe it will. And then, I think it's this now, a more complicated head and shoulders type of a pattern that takes it, I think, somewhere down to this level. Right. Yeah, McGraw, it's got some pretty juicy premium down there. But even going down to 4,100, which of course would be a no-brainer, but I think in 4,125 could be. And that's the attraction when they get that juicy and that far away. You're saying 4125. Let's clean this up for a second. Let's look at the spiders for a second. All right. Clean that up there. Where are they at? 424. It went down to 422. Yeah. Oh, so it was lower. And now retracing back up here a bit. And what we saw on the futures, this 430 area would probably be a pretty stiff resistance based on the number. I don't know that it'll get up there. So 24. So a little bit of a gap down, not a big deal. So if it does rally back up, you've got the gap fill where there's going to be sellers, and then a little bit more, which would be right there, 427-ish, right in that area where sellers should begin to show up. So just call it between 427 and 430, where it should run into some pretty stiff sellers on there. Now for SPX, it certainly looks like a no-brainer. Geez. Well, that's a wide bar. One of the things we look at is, could it create another giant bar like that? Well, sure it could. But where would that put it? Because that is a humongous bar, right? So I can't drag that down. I got to do it a different way. Let's do it over here. This way we can kind of do a little measurement without calculating numbers. Just kind of draw it, right? And just kind of take that and just do this. Just drag it down here, right? And that would put it around 4150 or so. So, I'd look at that and say, hey, what's the worst case scenario today? It's like, hey, this thing's just going to continue down another day. It's going to be a nasty day like Friday. And where would that put it? Well, it puts it at a number that we like, the 50, the 4150. It puts it down here at these pivot lows, right, where there's going to be support. It's a monster move day to day. Would it keep going down to 4125 or below? Probably not. All right. So that's all it is will it happen? Could get a crazy day, but will it probably not. So McGraw mentions 4125. It's juicy. 95 by $1.05. If it does drop like that, which, do you wait a little while? You wait, you could do one contract or two, whatever you want initially at the open, that maybe it does have that narrow range day. And that is, the high number of the day, who knows? But if it sells off, 4,100 is probably going to be $1 or better. And, that being, down here, absolute no brainer. So somewhere down here, pick your spot, see how it plays out. But, little common sense technical analysis of just looking to the left and average range bars and how far it moved from Thursday down to Friday and then today, if it was to continue, um, seems logical to me that it wouldn't get much further than that. Okay. Seems reasonable. You can get some fib extensions and Elliott waves and all that kind of stuff, but put a few trend lines on there. It's a little more fancy. VIX 16 is expected move today. 78 expected move based on VIX. 78 points. I don't know, McGraw, you gravitate a little bit to the dark side over there. They got some interesting stuff, but I mean, you saw what I did there, just kind of measuring it out. And if that lines up with whatever you're looking at, terrific. I like shortcuts and, easy stuff. So anyway, so futures, you see, it's chopping around here, kind of coming off at a low, a little bit of a void yet to go, and so on. Qs almost down here already, near the March low. And usually they take these out. That's typical what happens. And if we look at this from a measured move scenario, go like that, just kind of do something like that. Get rid of this. And do this. I don't know why this works, but kind of cool that it does. Usually ends up where I would look for it to go anyway. And look at that. I did this and now it lines up right where I've got my little green scenario thing there initially as a measured move to the downside. And you can look to the left there on the weekly time frame where that lines up. So that looks like a good downside target, possibly for this week, after maybe if today's a stall day and we get a continuation pattern coming down to this level. So down below the low, greater than 100% retracement. I like that as a bias for sometime this week to go down there. YM, that was holding up the best, and it just had to poke its head above the pivot high just to screw longs as deep as it could. It looked like it could keep going and then slam to the downside. And we've been preaching caution, for a while here. And it was certainly moments of doubt on my part whether it was going to play out. But I was just going with the bias of being careful and not getting too aggressive with longs. And now, chickens come home to roost, as they say. And it's got room to go down. So we're seeing similar patterns everywhere. Russell, already down to the bottom of the support area. And I think after a little stabilization, it'll go lower. It's got room to go a lot lower. Bitcoin down, coming down into support. Way back when over here, we were talking about potential for 30,000. Well, maybe it took a while, but after getting to this resistance, kind of looking like it could go down there. And I think it'd be interesting what's going to happen here over the coming month or two, because what we have now with Bitcoin is a big trading range that's been going on right for well over a year. And when we look at trading ranges, we look at a few things. Meaning, how does it go down and up in the trading range? Meaning, does it make momentum moves, fast moves to the bottom of the trading range? Right, this is where it just began to move to become a trading. Does it make fast moves up to the top of the trading range and stall? Which, fast moves create voids and opens up the door to counter moves. And this fast move down to the bottom of the trading range. Now, as time has gone on, what I see is while it came up off the bottom of the trading range, it didn't make much headway here. And it's beginning to form a lower level trading range down here where 50,000 is the top. right? So back here, it was like, maybe you can get back up to the top of the trading range, 70,000. But now we've got a couple of pivot highs here. So while it's going sideways at the bottom of the trading range, it now creates the thought, could it break below the bottom of the trading range? There's a greater probability. Now, while it comes down here, it might pop back up. If it breaks here, the proverbial crap's going to hit the fan overall for Bitcoin and maybe the broader markets where things get kind of ugly and all that, because there has been this correlation between Bitcoin and the broader markets that we talked about way back here where it topped out. And so this is something to keep an eye on, just because of that correlation, even if you don't trade it. But, lower range beginning to develop here. So keep an eye on it. Crude oil. I thought this could get back up, but nope. So more ugliness coming. So maybe oil, comes down, gas prices come down. That's a bit of a reprieve. But, oil going down also has, hey, here was this demand for oil. Now it's not there. Interest rates going up. So there's pluses and minuses to all this intermarket analysis. And so if oil breaks down here, I think that's going to add to the negative bias of the broader markets, but we'll see what happens when it gets to this support. And this was a little bit of a disappointment. It was looking great. And now it looks just back to, bad, chopping here, just a nasty breakdown, and just reinforces why you have to be nimble in this market. There's things that look like they could continue to trend and look great, just stops. And institutions just start hitting the bid where, as great as that looked, it's like, well, take the money, back down again. Gold, while holding better, it was, here we go. Back down to the bottom of the range. Pretty messy stuff out there. But we've been preaching the be careful thing, and it hasn't been easy. With this chop and erratic price movement, it hasn't been easy. But even look, how bearish can you get with when prices come down to the bottom of the trading range in a rapid way, and it can't even get back to the middle of it, an unfilled gap, and now it's breaking down. Semiconductors, we all know the supply thing and all of that, but regardless of fundamental stuff, technically a bounce was in order, and the bounce was so anemic, and so more bearish price action. So this is going to play out. It's going to get uglier before it gets better, and it'll take its course. And look, if you got longs and you're getting beat up here, money management is the key to survival in the markets. And at times, just sit on your hands, cash is a position, and just waiting for things to line up the way you want. Keep an eye on this upside target up there at resistance, set an alert, and there you have it. The MT Live on Wednesday, 12 o'clock, everybody. So outside expected move is always good. Outside, well, you always have multiple scenarios, and then we see how it plays out. You know that. We don't get into me, I'm not, I have my rare moments where I'm saying, this ain't happening 100%. And Dan is like, whoa, hold on there, Greg. Don't get too crazy. But, like 4,100 happening today in SPX, I'll say that ain't happening. Well, let's say there's a 0.5% chance, but look, we always have multiple scenarios, and we have our internal market gauges as far as trend, void, support, and resistance to guide us during trading day, as well as for swing trades. So all yours, Dan. ZB putting in a bottom. I covered this And in the weekend video, it's coming down to support. So it's getting there. Go ahead, Dan.
All right, good morning, everyone. Yeah, we've been bouncing here off the pre-market lows. I was hoping, I mean, you all remember what I said in the green room into the close on Friday. I said, I hope we gap down. We started to almost get exactly what I wanted. I think I said, I hope we gap down to 420 or 421, you know, and then sell off another $5 or so. That's what I would have loved. But now we're stalling here at market about to open here in 6 minutes, and we're getting a sell set up in a power downtrend on the 15. But I did send out an alert saying, you know, just hold off on shorts here, the new shorts.
Master a trader, you might be thinking this morning about a stock market.
Greg, your mic. So yeah, I'll go through as always on Mondays, but whenever we get a big gap, kind of messes up those, you know, a lot of those trades in that direction. But I just want to go through them one by one as well. And we still have a bunch of open shorts. I got alarms on them. We're in trail mode. Let's see what I got going over here. There's not many earnings actually today, but I just saw this little guy going by the ticker, making the turn here at the 50, gapping up. Buy setup from a bottoming pattern on the weekly. This could be a home run entry right here. $14.40. Wow, that's what you call a pro gap. But see, all pro gaps are not buyable. But that is a pro gap. It's gapping from, you know, $8 to 14. But there's some, what do you want me to do with it? I mean, might set up for a day trade, but the gap's so big, I'm not going to even be bothered. $82. All right, so this one's, it's not a pro gap, but it's a bullish gap. It's gapping over all this. Has room to 85. So I'm going to put that in a little window. CMO. Twitter. Bosca's, you know, ponying up more money, so it looks like they're going to take it now. Now, you know, I love when the media calls Musk the social media agitator in chief. And when he came out that day, a week or so ago, and said, oh, this is my best and final offer, whatever it was, 42, 44. My initial reaction is, you're so full of you know what. You really think you're coming out on day one with your best and final offer? Yeah, right. So that's moving up. The obvious one that's going to get affected with that is DWAC and, you know, any other competitors. So DWAC up and down here. I don't know, nothing to do with it. AMD got an upgrade. That looks possibly a day trade, but that's in a power downtrend. NVIDIA actually had a Barron's article, and that, you know, there's a lot of stocks that are damaged. Look at Google. Look at Google on the weekly here. That's cracked. It's in a downtrend. Lower pivot highs, lower pivot lows. Big old topping pattern. Otis had earnings, gapping up to 76, but gapping to a big fat resistance. Nothing to do. ATVI I like as a short. It had earnings, gapping down just a little. It's a breakdown. So that's what I call a tier one setup. Like multiple time frames, the gap's not too big. It just had earnings. Futures still weak. So this looks fantastic. Well, I got it right here in the middle thumbnail. And as long as it doesn't bounce and slice through Friday's high, and as long as it doesn't tank at the open and fall $3, $4, then my original bias is 5, 10, 15, 30-minute low. I don't know. I'll tell you after the market opens. P-Core, yeah, it's a 1, 2, 3. Only thing I don't like is this prior low over here, but the fact that it went sideways for 2 weeks suggests that it should go through it. LII, here's as it had earnings. I can't tell where it's gapping, but sell setup daily. FXI is China, so China getting whacked here, and that still looks lower. The news said the Shenzhen China stock exchange was down 6%. That's pretty bad. Dash, I just had a low alarm go off. We're short this already. So I'm going to set a new alarm. I'll set it at 87 and 89. We got a lot of nice open shorts. Been in trail mode. BOH had earnings, no pattern at all, even for day trade. Wash, no pattern, no volume. Coke, that's bucking the trend. Look at that run from 58 bucks. Amazing, even with recession fears and all of slowing economy. That's an amazing